following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are having a good Thursday morning in the States. Let's take a look at the S&Ps. And what we did yesterday was just flat out unbelievable to me. Having a reversal like this, we've been talking about trying to sell rallies, trying to, pick inflection points, resistance areas to be able to kind of lean against. And, we hit some targets down below at 2060. Obviously, tomorrow's Friday. We're going to have to wait for a Friday close to really get a serious bearing on what's going on in the long term. But here's the situation. Are you guys still hearing crickets again? I swear there's not a cricket here. It must be something in the internally in the machine here. I apologize for that. We've got a situation where we're back in the balanced area on the weekly. But let me just kind of walk through this process because I don't like to leave people hanging. We talked about the target rich environment around 2060. That was kind of the takeout point, and then wait and see, what happens the rest of the day, where their daily closes are, where the weekly closes are. And we also talked about the inflection point up top, 2085.50. Well, that was hit. And then, we talk about also being in overnight trades right now may not be the best thing in the world. We talked about opting out on longs. And now we're just rattling around this 2085.50 area. We've been as high this morning as 2093. So, I'm not real happy with this. I'm a little bit short-minded. I think some of the global events, as we talked about yesterday, they seem to have just thrown them out the water all of a sudden. But they're still there. They're not going away. And any migrations down below 2085.50, especially daily closes, I'm looking at that as a pretty serious situation to pay attention to, and the ability to be able to short against those levels. That's the way I'm looking at the S&Ps. Let's go down and look at the dollar. A lot of this, stuff in China and some other things going on that we've kind of gone over this past week, allow me to still be relatively bullish on the dollar. And we talked about this 96.11 area that was hit yesterday, and we're kind of coming off there. It's nice to see this. And we talked about putting stops oriented below 96.11. That's still my stance on this. If you kind of go backwards in time, take a look at the dollar. Technically speaking, I still think it's a relatively ripe situation. And we always talk about letting the market come to you. That's really been a nice little feature here to allow the patience to kind of kick in here. You don't have to be in the market all the time, and that's what one of the things that we always talk about on the S&Ps is, we talk about the major inflection points, and we talk about, where's the leverage biased point of view around those leverage points. And I'm still shocked that the market rallied like it did yesterday, but that's what stops are for. The treasuries, this is something near and dear to my heart on the long side. Had a pretty good reversal yesterday, but again, we talked about long-term support 127.11 into 127.14. That's still my stance on it. Those are weekly and for lows, daily and for highs. That short-term support here that we looked at pre-market yesterday, 128.0203. Obviously, that was a little bit of a short-term trading stop out. But again, I'm pretty much primarily focused on the long-term trade on the treasuries and trying to, treasuries are difficult to trade. It's one of the hardest instruments to trade in the world. And I like to kind of give the treasuries a little bit more noise to rattle around. So that's why I personally like to trade them on a little bit more longer term basis. Let's take a look at gold here. Again, I'm not a big fan of just buying breakouts on gold, even though we've got a decent little technical setup here. We've come back closed above this 11-12 area, which I was trying to leverage on the short side. And the last time we went up. That's a little bit too rich for my blood, going above here to 1125. Now we're coming back and retesting the 1112 area. I fully believe we're going to get back down below 1112. That's where we're looking at. Again, it's lose a little, lose a little, lose a little, make a lot. You've got a chance, again, I think, to race towards 1081 on this trade. But again, you've got to wait patiently, let the market come to you, get back down below 1112. And that's the way I'm looking at gold right now. Get something up here really quick. All right, so as we look at, oh my God, that's not good. As we look at gold, we're going to take a real quick look at silver. This has been on some folks' radar screen. It's been a little bit stronger than gold on a relative strength scale. We talked about, inflection point up top, 1585. That's got to be paid attention to on silver. And we had some breakouts around 1478. We talked about that. And those two inflection points, I'm a big fan of shorting off of this 1585 if we can get up there. I don't know if we're going to make it now. This is the daily again. Again, not a big fan of going long silver, so we pretty much missed this move if you've taken that attitude with me. And you've got some short-term breakdown situations below 1526. That'll be the shorting areas, in my opinion, on silver. Again, I see a global kind of devaluation going on right now, like a lot of other folks, and I think gold and silver are not going to be the rush to buy situations. Here's soybeans. Again, this is, obviously a big report. We talked about, not really wanting to be long this particular product. Here's the action lately, and we talked about some targets down below on the south side of 910, 911. Those have been hit. So what do you do now? Now that this thing has, come out with the news and done what it's going to do, honestly, guys, this is the daily. There's no new information down here. Here's the 240s, 908, 909, 910. That's a big number down below. So again, I'm not a big fan of, and you've got 923.5 up top. So I'm a seller of 923.5 up here, and I'm also a shorter seller of breaching 908. All right, and again, we've talked over the past couple of months about beans getting into the $8 range, and I fully believe that can happen now. I think the market's made a statement here, and you've also done this on the dollar pulling back a little bit. If the dollar rallies more, I think that could actually help these commodities continue to drift a little lower. So that's my take on beans. I want to go back to gold for a second really quick here. We've got an orange bar appearing here on a weekly. That means we're going to have a new profile up here. We're going to have new inflection points on our long-term weekly on our December contract. So pay attention to that. That's going to be, I hope we get a new level around, this particular area and some unfair lows even lower. That means that we'll have long-term inflection points to sell, which are very, very powerful, and some targets, maybe even south of 1081 on gold. And let me read what's going on here. All right, just checking it in. Let's take a look at December corn. Similar reaction. Short-term traders, you got 375.5 up top, 361 down below. Again, on a relative strength scale, made new lows. Soybeans actually didn't. This is our weekly. No new boxes attempting to appear down here, and here's our daily situation. Again, we've talked about getting down into 325 on December corn. I still think that can happen. Make sure you put your stops in. This was a little bit of a harrowing experience with soybeans and corn rallying like they did last month. But again, we passed on some longs, and now I think we're back in the ballgame here on the short side. All righty. Let's take a look at the XLE really quick. We got about 20 seconds before the break. We're going to kind of, talk about this. We've got some technical damage happening here for the short, 69.41. We're going to pair that with crude oil in just a little while when we come back. That was our daily view. This is our weekly view. got a new profile attempting to appear here on this ETF, and we're going to discuss that in just a few minutes.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I think we've got our cricket out of the line here. I think that was a don't put your headset wire underneath another computer. I think that's the deal there. And while we're talking about weird things, Trump, people are ready for somebody who's anti-establishment for sure, but it's amazing. Some of the things that come out of his mouth. I mean, I'm just waiting for somebody to go to his level and start, ribbing him on certain things that are kind of ridiculous. Like, I don't know, maybe the comb over thing he does. It's just, this is going to get really weird, and I have no idea where this is headed. And but it's nice to see these guys on the TV who are traditional, like know-it-alls in the political community, just to see them completely in flux right now. That's actually like a comedy show to try to somehow see and hear them try to make sense out of this. I think Trump's rude as crap, and his track record, he's got some skeletons in the closet. They're probably going to heavily explore it sometime soon. But wow, amazing. Let's take a look at the XLE relative to crude oil. I'm being nice talking right now. Let's look at crude oil. All right, so again, we're kind of sub $43 right now. No mystery to anybody. Here's the 240s. No breakage of rules. No, we found an area the other day at 45. We talked about selling. That was, that's $2 ago. So what do you do with it now? Let's just kind of back up for a second. Look at crude oil. This is our. Let me make sure something here. Yeah, this is our weekly. The thing that's a little concerning here, you've got lower lows on crude oil and higher lows on Navigator. There's no mystery to that. We still got some bright red bars here. But that divergence in itself is a little concerning. We've kind of, did I just lose? I lost my 240s. Let me do something quick, guys. Let me close the page and let me not save it. Let me reopen it. How about that? See if we can get fixed here. Okay, awesome. Let's go back to crude oil for a second. And, we've been bearish on crude oil since, God knows, 60 recently. Here's the daily. We've had these magenta bars. We've talked about that. Usually when they line up like that, that's usually considering some type of bottom. The long-term divergence in crude oil price and the Navigator is concerning. But what really is a little more concerning, that the trend may be over for a while, is looking at this XLE. Here's the weekly on the XLE. This usually means a new demand area is going to happen, especially if this stays enforced by Friday. On our daily, you got the first breakage of rules here on the way down since the 80s or the mid 80s. That's a little concerning. So I would, in my opinion, right now, all things considered, I'd keep your eye on the XLE, and I'd step off the gas pedal, get away from the gas pedal. Excuse me, I said that wrong. On the short side, for a while on crude oil, and I'd kind of monitor this XLE situation. Okay, apologize for somebody trying to call me here. Let's take a look at natural gas really quick. This is something I've not been a huge fan of buying this. I've talked about this, big balanced area down below. We're at 290, 291 right now. Here's the situation here. We talked about leveraging off this 2.824 the other day. That was a decent little trade. Getting back up into that area, and especially consolidating around that area, is concerning for shorts. But right now, I just think we're gonna stay in a long-term, relatively wide range here. You've got a really good selling point at 33.106 up top. And again, anytime we get down below 2.824, I think we've got some selling opportunities again. So those are the inflection points. I think we're in no man's land right now, and that's the situation on natural gas. When we come back from the break, we're going to hit a couple of stocks, couple of earnings related stocks, and we'll be right back, guys.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's 0 risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Let's excuse me. IBM, let's take a look at that one. This is one, we've obviously had this on our radar screen from the short side. Had a little bit of a snapback yesterday, trading 156.39 right now. Again, I would just sincerely love this thing to get back up into 158.20 and just pound this on the short side again. No, taking off consideration type clues on the long term. And that's the way I'm looking at IBM. Let's cover a couple other things we missed before the break on the usual suspect list. I got to hit the euro. This is, again, one I'm just not exactly excited about. We hit that on the long side. We hit that level that Eddie or Juan was speaking about yesterday, around the 112.0708. We try to find areas of concern. 109.50 was the big level for me, and then the next level up, especially in a profile that's relatively wide. If you can see this, I'm going to go into the scanner also. I'm going to go into our Forex section, and here's the EUR USD. There's the inflection point, that POC 112.0708, and there's the bottom at 109.50, 109.48.49. And we go into our landscape view, we see these. There's the 112.0708. There's the daily unfair highs, which I had paid attention to, and there's those weekly unfair lows. So what do these all mean? I mean, I'm looking at certain things in consideration of those levels too, but Juan pretty much stated you got 112.0708 yesterday to leverage off of. We're down 100 pips off of there now, and I would just really long-term wise love to see this thing get below 109.50. But again, we try to find areas when we have a certain stance on something. We try to find areas to pick the battles and wait patiently until that price goes into that area. And that's the situation on the euro. Do I think our targets down below off of 112.0708 are still ultimately that 109.50 area? Yes, I do. Right now, a little mixed up. I'd love to just see it get a weekly close below there and then start hitting the gas pedal on the short side even more so. The yen, man, what a ride yesterday. Almost came back down into that maximum support area that had been ratcheted up. We almost hit it to the tick. Low was 123.79. That's 123.68 that we picked out. Again, we're looking at this just like the euro. We're looking at this from the, conversely, like the euro, we're looking at the yen from the long side. And, it's just anytime you have any type of pullback on this product, it seems like there's support there, whether it's governmental support or just regular folks like me wanting this thing to get devalued to make some more money off of it. 124.72 up top. I think we can call that satisfied yesterday. And I like the action, not even wanting to be anywhere near those daily unfair lows. Here's the weekly, one of my favorite trades out there. Okay, I'm going to try to do the Yuan right now. I'm going to see if we have it on our list. I don't think we do. I'm going to try to have to research on the e-signal what that symbol might be. If you know it, John, can you please type it in? If you know that symbol, I'm going to try to research it on, because I've got to put some extra things on the e-signal to kind of make that work. Let's see why there's been. All right, so we're looking at the Yuan USD or the Euro Yuan. Let me just try something here. Sorry, guys. I might have to put some extensions. Let me figure that out at the break, John. I'll do some research, and I apologize. I don't have that up and ready right now. Somebody's saying they're hearing a cricket again. God, I gotta unplug everything and plug it back in. Here we go. All right, so again, that was the euro a while ago, and we're going to look at the yuan in just a second. The Canadian dollar, believe it or not, you got an orange bar appearing up here. On a long term, that's not exactly the best case scenario to continue the long, but this is what I love about this. At the same time, you've got that situation We talked about long-term support at 129.32. As you can see, we almost hit that yesterday. The low yesterday was 129.50. So got in the neighborhood, getting away from that area, which I like. You want to see prices get away from these inflection points, not just hang around on those levels. And again, it's, what do you do with the Canadian dollar? I think on the long-term basis, you got to sit tight right now. That orange bar is very significant, and I'll show you why. And I'm going to go to the Canadian. Where the heck is it? There it is. All right, when you see that happening and you go over to here to Taz says, it'll tell you at some point, caution to longs. Targets may have been met. I mean, this yellow kind of peel back starting to happen is a kind of an indicator in itself. You're within the fair auction here. If we get that to lock in, and it'll show locked in by either Friday after the close or Monday before the opening, that'll be a little bit of a lid on this thing for a while, and we'll have to really find longer term support areas for this. Yeah. So that's the situation on the Canadian dollar. I'm from North Carolina. I can't read and talk at the same time, so I apologize for that. So people are typing some things in there. So, what do you do with the Canadian dollar? I think on the long term, you sit tight. I think on the intermediate and short term, I actually think you've got a little bit of a situation. You can actually still trade this from the long side, but again, the long-term trade, and here's the 240s here. I think the long-term trade, you got to sit still, and it might not be a bad idea just to kind of get off the gas pedal, step on the brakes for a while. I mean, we've had a good run in this thing, and you got to pay attention to that. The Australian dollar, just want to cover this. This has been something that, again, I don't think is going to change anytime soon. We talked about new levels of selling, 74.39. Didn't even get there. We're kind of bouncing around. No new breakage of rules. I still like this to hang on to the short side on this trade. Let's take a look at, somebody wants me to take a look at EEM, emerging markets. Kind of could see the writing on the wall here on this one. Weekly, just, I don't see a lot of reasons. I mean, obviously that 37.05, I haven't looked at this before as an ETF, so pardon me for my ignorance on some of the history on this particular ETF. But the fact of the matter is we're trading below profiles on the weekly and daily, and pre-market it looks like we're trading 35.71. Don't see any reasons to start buying this, actually. When you, just like on the Canadian dollar we just spoke of, conversely speaking, you want to see some signs here. Long term, you don't see any divergences. You see the bright red bars still here on Navigator, which Navigator's a kind of an amalgamation of quite a few things that we put together. That is a kind of a coded situation that if you guys want the skinny on that, I'll send you a document on it. But there's no new signs down here. There's no turnaround situations going on. And again, if you buy this today and it rallies significantly, then you're the guy who found the bottom. But let somebody else find the exact bottom. We want to get confirmations. We want some information to confirm, give us a little bit deeper conviction on these turnarounds. If you play the game where you're going to buy the thing that's low enough to buy or something that's high enough to sell, that's a very dangerous game. They take people out in body bags who try to do that. Just get some confirmation, have some reasons technically that you're doing those things. Is probably the best course of action. Let's take a look at the DAX really quick. And wow, what a mixed bag here. We don't have a lot of data on the September. I'm just going to go to our last box here. 11.439, still unfair lows on this. Let's take a look at the daily. I'd stay away from this. I'm not a big fan of buying any European indices. So that's my take on the DAX. All right, let's take a look at Tesla. Got some activity pre-market. 242 looks like last trade. Here's the situation on Tesla. We got below 245.5. don't know if you can hear that. We got below 245 in the half, and we've kind of gone back and retested that. We've reached a high this week of 243, in the same neighborhood. Let me check something on my microphone here. Okay. All right. Making sure the cricket was still there. I know you guys are enjoying that. Tesla getting below that 245.5 area, but pre-market 242. So we're looking at 245.5 as a serious lid. The theory here is we've closed below our long-term profiles. We're kind of going back and playing around with that level. Again, I'm looking at Tesla relative to the stock market in general, and stops above 245.5. Can we drift lower even though we're up high this morning? Yes. Where would the targets be? Again, I would just look for new profiles attempting to appear on our daily and weekly as and that would be delivered within the scanner here. If I go into my dashboard, let's just find Tesla really quick. There we go. I would just wait and see some new colors start to appear here, or some new signs on the short side on Tesla. All right, let's go back to our dashboard for a second. Let's take a look at some stocks in particular. And what we're going to do, considering the rally we had yesterday, again, we're still going to look at below the box. And we're going to just kind of drift down through here. We've had a couple of, it's just the same instruments here. Let's take a look at Disney. This has been something kind of interesting here. All right, so talked about Disney last week. Thank God the mic is sounding clean. All right. We talked about Disney last week, just waiting until we got down to this 105 area. That was hit. We've rallied back. And I want you to look how clean this is, actually. We had a new profile appear this week. We haven't pulled this up this week. But, if you go to the scanner, you can find all these things out. You can set up your custom lists. I just did a couple of tests. You could see this. But you can access them very, very quickly. We're actually putting alerts in here, too, in the next week or so. But if you go into the dashboard and you go into Disney here, there it is. All right. You'll know when all these things are happening, but the fact of the matter is the new bottom of our profile, 111.38. So let's pull that up. So that's sitting there. Now we're sitting below our daily profiles, which is obviously shown in this particular scene. But when this new profile appeared last week, it gave us a really good resistance area around 111.38 this week, and last week that 111.46. So you got two inflection points lining up. That was a very big Maginot line, if you will, to lean on the short side. And you're probably going, well, thanks for telling me now. But again, I can't cover every stock in the universe, and the scanner is going to pick these things out as they happen live. So what you do is you set up a custom list, or look at the broad market in general. You set up your sort list, and you be able to flag when these things are happening. So what I would do to flag those type of situations is I would say, let's see when we're having new boxes attempting to appear, and then those are going to be in effect next week. So what does this mean? I've got quite a few stocks here where weekly new profiles are attempting to appear. So on the short side, when you have this happening, these are targets type scenarios, and these are long target type scenarios on Beckley Dickinson, Carnival Corp, which are have been longs, Nike, Starbucks, Charles Schwab, Under Armour, Visa, Wells Fargo. So going back to Disney, what do you do with this thing now? I think the thing's showing its hand. It's an ugly situation. You've got 11.38 sitting there, and now we're back down below 11.81. So intermediate traders, I think you can put your stops above 107.81. I like the action in this yesterday relative to what the market did. But long-term stops have to be above 111.50 on this. I think this thing can go much lower, and that's my take on Disney. again, this is a big technical breakdown, and we've kind of gone back and confirmed that retest is not going to work, or that rally above that former unfair high is not going to work. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I was just trying to confirm a Bloomberg brief they're going to release this morning. That's the risk of trying to do these research reports ahead of time. It's, the market changes so quick. We talked about this the other day. I mean, I did this on Apple. I guess they're sending it out this morning, but my God, these things change quickly. And it's like you hate even sending these things out 2 days late, which you have to wait for them to approve it and all that kind of crap before Bloomberg sends out these things. But I wrote this, and it's almost like, so many things can change within 2 days. That's why I love the scanner, because the scanner gives you a real-time research report. So if I come in here and I say, what's the story on Hess Corp? Boom. I get it with all the latest inflection points and the latest tone. We're going to continue to enhance this. Taz says little section here, but I don't understand how anybody can take a research report done for the week and actually, my God, oof. Weird stuff can happen in a couple of days. Hess, let's take a look at Hess. That's not the right symbol. There we go. Based on that alone, again, looking at the XLE situation and looking at, okay, wow, we got a cool situation here. We've got a new box attempting to appear on the long term. As you guys know, we listen to the show enough. That's a target-rich environment, at least for the shorts. Dangerously sitting at the possibility of a breakout on this thing also. Not the best XLE stock to buy. I'm going to go back into our ETFs. I'm going to go into our daily ranking for this is as of the close yesterday. Not a lot of fanfare. The XLE's, on the ETF separation in general. XLE long-term is still ugly on the breadth situation. But, as you can see, there's been quite a few green shoots that have been happening here as you look at this ETF on many different levels. So, again, we talked about the leaders of the pack, the Valeros, the Tesoro, a couple of others, and let's just see how they have acted, VLO, because they were kind of showing their hand early. Yeah, I mean, these are the ones, if you talked about putting a gun to my head and buying oil stocks, these have been the ones we kind of picked out early. This is great proof of concept in relative strength trading within the market and within the sector. This is our daily view. These were sitting right at the top of profiles, had not really backed off that much as oil's been cratering. That's just an awesome little situation to see, actually. Tesoro, no mystery to anybody. And voila, past couple of days, there we go. I think we had a couple more here that we were paying attention to. I think we had, I want to say Murphy Oil, MER was one of the ones we had on our, it was Marathon, MPC. That was the one that was showing some green shoots early on the scanner as the XLE was cratering. I think that was it. Yeah. Wow. That's a heck of a move. $6 on a $50 stock. That's like a 12% move. Let's go back into the scanner. Let's take a look at some others. So, again, what do you do now with this move up in the XLE and crude oil sitting on the bottom? My take on this is that I don't know about buying XLE stocks like wildfire. I'm looking at crude oil and waiting for a new profile to appear and possibly trying to step in a little bit now that we've got some reasons to start nibbling possibly on the long side on crude oil. But you got to wait for those confirmations, guys. Stay tuned. Larry's next. I'll be doing Tom's show this afternoon from 3 to 5. Stay tuned to TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.